All right, let's talk Tesla stock and earnings. We have earnings coming out next Tuesday. Here's what you need to know about the stock and the potential reaction, in my opinion, to what might be a potentially inflection point earnings. Now, the reason I say that is because everyone and their mom has long expected this, it's essentially this first half of this year to be ugly. But it seems like the general sentiment from Wall Street analysts is that this earnings call for Tesla, this earnings report, I should say, will have the bottoming of margins for the first time in a while. Now, if we see that, that would be a stepping stone forward. One thing to keep into consideration is, in my opinion, I think good news is actually more so baked into the stock than bad. Now, the reason why I say that is because simply Tesla's up 34% in the last month. When a stock's up 34% in the last month, while earnings is coming out, I mean, disproportionate risk is to the downside. Just because the reason why Tesla has shot up, in my opinion, hasn't really had much to do with cars and more so to do with robotaxis and AI and Wall Street FOMO. And we know that the 8.8 robotaxi event is officially delayed. Elon has pretty much confirmed that. He said that the delay is because there were some front end changes that he wanted to have to the car, some front changes, and potentially release some new stuff, some cool new stuff. By the way, here is my guess on what the cool new stuff is. The design, I don't know. I don't really care to guess for it because it's going to be completely off base. But the cool new stuff, I think, has to do with Grok. I think the reason why Elon has probably delayed it is because the Grok functionality in the car, which we know will come in a future update, is not yet ready. I think Elon wants this Robotaxi event to almost be a 2-in-1 commercial for XAI and Tesla, and showing the embed of XAI and the powerful large language model that can be in the car, and then show it demoing by the car driving itself. Here's some good news though. FSD 12.5, it looks like should come out in the next week or two, at least internally. Chuck Cook is reporting that 12.5 testers are out and about in his neighborhood, which usually precedes it by 3 or 4 days before we start to see the first few updates roll out to employees. So there's so many moving balls here, but next week's earnings on Tuesday, I think, have more so of a downside risk than an upside risk. The best win in my books would be a decent earnings and the stock being flat. We know that Tesla loves to crash on earnings reports. 5-10% red days usually following the day after. I think a flattish day would be a win for the next move leg, whatever you want to call it, higher in Tesla. You know, the 250 level, and we're at 255 or something like that right now as we record. It's a pretty important level on the weekly. It sets us up for heading up into the 300s, of course, beyond that as well to all-time highs. But this weekly, this week, let's fast forward, prime week, whatever it is, next week's earnings, making sure that we're trading above that 250-ish level is important. Again, we talk about technical analysis and I talk about supply lines, demand lines, and all that sort of stuff. But the reason is because there's disproportionate moves that happen when you can follow this stuff. And namely, the move that we saw from 180 to 250, where we're sitting at right now, and Tesla had to do with that as well, because seemingly it was running on nothing. Okay, so that's FSD, that's 12.5, that's earnings next week, that's stock talk. I think the last thing I'll leave out with is a surprise that we might see at the earnings call. And in my opinion, the surprise that we might see that Wall Street would actually care about is subscription revenue. If Tesla can jot out, line item out, what percentage of the fleet are subscribed to FSD, or what sort of incremental revenue they're seeing from FSD monthly subscriptions, that could be big. And the reason why I say that is it's kind of a wild card scenario. I don't think a lot of people are really talking about this just yet. But if Tesla were to model out, 10% of their fleet, 8 to 10% of their fleet currently in North America is subscribed to this thing, all of a sudden, mark my words on this, you would see Wall Street come out the next day with DCFs on the subscription FSD model like Adam Jonas has. By the way, I don't know how Adam Jonas does it, but he literally has a new node every single day. But you would see the following days to weeks following if Tesla line items out their FSD subscription revenue, and it's a decent number, a new business model, a new valuation attached to this. And we're talking hundreds of billions of dollars, because to be able to sell a monthly subscription to a car is not hard. It doesn't cost you much in terms of variable costs, mostly just fixed costs. And so that would be a huge, huge boon to Tesla if the numbers are good, to be able to show them. Now, if the numbers are bad, let's be honest, Tesla's not going to line item them out. We're not going to hear about it. But if Tesla wants to gloat, this is their chance. And I think, aside from everything that's being talked about, margins and how many cars they're projecting for the year and EPS, of course these things matter, but the wild card that I'm going to throw out is FSD revenue and line iteming that out with a subscription rate, or just revenues in general for the quarter from monthly subscriptions. In particular, the monthly subscription part is key, not just FSD packages sold. Alrighty, Yash signing off from beautiful Vancouver. Hope you have a happy, wonderful summer day. If you're around me, it's like 29 degrees today or something like that. It's just crazy hot. Well, I guess Celsius. Someone can throw it into Fahrenheit, what that is for my American friends. All right, much love. I'll catch you next one. Yash signing off. Peace.